seems like we just got the Christmas decorations put away, and here we are, 6 weeks into the new year. So it's kind of flying by. So as the middle of February is upon us, it's time for your real estate market update, which I put out the second week of every single month. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And this month we're going to cover a few main topics. We're just going to take a look back at 2020. Some of the final numbers are in. We're going to talk a little bit about home prices and supply and demand and what's driving those prices. We'll touch a bit on mortgage rates. We'll look at affordability, and then we'll touch on the latest with regards to mortgage forbearances and a housing bubble and foreclosures and all of that good stuff. So to start out with regards to last year and home sales overall, we've been talking for a while that home sales last year were flying. I mean, the activity in the real estate market was crazy. Even though we had a shutdown, for use of a better word, with a lockdown that affected some parts of the country more than others, existing home sales still just went ballistic. And as soon as those lockdowns were lifted, the number of homes sold was up 5.6% from 2019 and was the most number of homes sold since the Great Recession at 5.64 million units. So whoever would have thought that what we experienced in 2020 would result in this in the real estate market? And what really happened, and it ties in with regards to inventory itself, is what the pandemic seemed to do is make many people reassess their current housing, where they currently live. Does it suit their needs? Working from home wasn't going anywhere, isn't going anywhere. Now all of a sudden the kids are home doing school, and your wife may work or husband may work. Now there's two workers in the household, and we need more space. And that fueled demand. Interest rates helped as well, but it fueled demand. And as a result, the amount of inventory that we had got sucked up very, very quickly. And here's what I mean by that. Right. Again, this is looking at national supply of homes. It's going to be different in every market of the country. It's different specifically where I am right now. But this goes all the way back to September of 2019. So you can see here that September of 2019, October, November, we're right at about 4 months, 3.9. December of 2019, we dropped to 3.6. But look at December of 2020. 1.9. So to put that in perspective, in general, 6 months is considered balanced, meaning the market doesn't really favor buyers or sellers, but the market overall is somewhat balanced. 1.9 is a strong seller's market. And in the markets I work most in, my team specifically, it's even lower than that. So in Frisco, Texas right now, we have a 0.6 month supply. And in adjacent Prosper, Texas, we have a 0.5 month supply. Yes, that's 2 weeks, half a month. Southern California, where we are, very, very similar, right around a month, just under a month, depending upon the area. So what does that mean? Well, that means if you're in the market to buy a home, you're having a hard time doing that right now because there's nothing for sale. And what does come up for sale receives multiple offers virtually within hours, let alone just a day or two. Home prices are being pushed up well above list price, and it becomes a very frustrating situation for buyers overall. And as I mentioned right at the beginning of this, the price is being pushed up. What we're experiencing right now is a result of supply and demand. Obviously, very, very low supply and high demand. So in addition to what went on with the pandemic and people's changing housing needs, the other thing that has helped fuel demand is mortgage rates. So mortgage rates, as you know, have been ridiculously low. And with that, it's forced that demand to just continue. And it's had a big impact on home prices. This year, though, we are forecasting that more inventory will come on the market. New home building permits are up. The builders are building flat out. And we also think that more inventory will come just in the resale market. And I'll touch on that in just a little bit. But the net result of this is home price appreciation. Right now, if we look at the forecast for 2021, of the seven major forecasters, we've got an average of about 5% is what they're projecting for appreciation in 2021. Here locally, we're seeing the prices in Frisco, Texas were up 15.2% year over year. And in Prosper, Texas, they were up 6.8% year over year. That's January to January. Those numbers are going to change based on where you live. And to be honest with you, they're going to change based on zip code, based on city, and even based on neighborhood. So if you'd like more information specific to your neighborhood, if you're in the areas that I work, reach out to me. I'd be happy to set you up on a report that will show you the changes. Otherwise, contact a local agent in your area and they can get you on some information that shows you what's going on specific to your neighborhood because it can change very quickly. Now, with that in mind, one question that comes up is affordability. So, yes, interest rates have been low, but home prices are going up so quickly. What does that do in terms of affordability, and what's that going to look like going forward? Well, this right here takes a look at affordability all the way back to 1990. And this one here, the higher the number, the more affordable housing is. Okay, so as you can see, it goes back to 1990. We were at a range of 108. Right now, as of today, we're sitting at 168.2 on this chart, which is really affordable. So even though home prices have gone up, what's happened with wages increasing and interest rates coming down, it's kept affordability in check. Yes, unemployment's been up. Yes, there's uncertainty in the market, which is what's led to a decrease in supply. But overall, for those that are still working, wages are up. So affordability is also up. I mean, right now we're running very, very close to or just above the distressed property years during the Great Recession when the market crashed. So to put that into a different form of perspective, so to speak, when we look at the percentage of income needed to make a mortgage payment, on average, the historical norm is 21.2%. So about 21.2% of your income is what goes towards your mortgage payment. And right now we're running at 14.9. So if we were seeing home prices increase the way we were, and all of a sudden we're at 22, 23, 24, 25% of income to make the average mortgage payment, that's when we start talking, affordability issues. We start talking, is this a bubble? Is something going to burst? Is that going to change? Right now, we have supply and demand fueling the market, but affordability is currently in check. Okay, so just something to point out, right? To keep in mind, it's going to be different in different areas, but right now, all of the basic parameters, the fundamentals of the market are strong and good. So, what's it going to take for this to change? Right, well, a couple of different things. One is more inventory. So, we're either going to need more inventory in terms of increased supply, or we're going to need a decrease in demand. I don't necessarily think we're going to see a decrease in demand. Households continue being created. We did see a slight drop in mortgage applications this past week due to a change in rates, which we'll go into in just a second. But supply is the biggest factor. It's the number one thing holding the market back right now. So a survey that was done recently asked potential home sellers last year who didn't sell, who chose not to put their home on the market, why? Here's what they had to say, right? So the top three reasons were life is too uncertain right now in general, financial uncertainty, and COVID. So COVID, we don't want people walking through our home. It's a health crisis. We don't want unnecessary individuals potentially bringing in something to the house. We don't know where this is all going to go out. So everyone just kind of paused from the seller perspective. It's expected, especially as the vaccine rolls out and we move further forward in this, that we will see more inventory come on the market from resale homes. And you're going to find that people become more comfortable. They adjust to what's going on. There's going to be more certainty about what's going on with their job, the future, and they're just generally going to feel better about putting their home up for sale. So you should see some inventory come on the market in that way. Hand in glove with that, though, is if people are considering moving, where are you going to go? If you own a home right now and you're like, yeah, I'd love to move to a new home. If there's not anything for sale, you're going to be stuck. You're like, well, I don't end up homeless. So I don't want to have to move multiple times. How does this work? I'll put a link below to a video I did recently on how, what some of the options are for selling and buying at the same time. It is a challenge. I'm not going to lie to you. It's something that needs to be figured out. It's a hurdle, but it's obviously something that we deal with every single day. And I've got some ideas there that can help you with that. So it is expected that supply will come up. As I mentioned, mortgage interest rates also play a big part in this, because what are they going to do? Where are they going to go? They've risen 4 of 6 weeks so far this year, which has caused a slight pullback. Not from an affordability perspective, but some of that pullback can be attributed to buyers are frustrated. They're like, there's nothing for sale. We're just going to wait for a little while. Okay, so on the supply side still, the other aspect is forbearances and foreclosures. Are a wave of foreclosures coming? Is that going to impact supply dramatically? Well, yes and no. I've been saying all along that we are not going to see a housing crisis due to foreclosures based on the forbearances that have happened. About half of all homes that originally applied for or entered forbearance are no longer in it. So right now, there are about 2.7 million homes in a forbearance program still. But of those that came out that are no longer in forbearance, what happened to them? Well, here's what happened to them. 51.7% were the back balance due was brought current, or the mortgage was paid off. All right. So you've got a situation there where the payments were caught up. Those may have been people that, hey, it came out. They may have owned their own business. We don't know where things are going to go. So we're going to go ahead and apply for forbearance, but they didn't really need it. Okay, not everyone, but there's a case where they didn't really need it. The other 33% actually worked something out. Either a loan deferral was put in place, which basically means the lender may have said, we're going to take the payments that you've missed and tack these onto the back of the loan, adjust your loan balance or extend the term of the loan, and they've worked that out. Another 7.5% had a loan modification. So about a third are actively being worked out, which leaves the final 15.3%. Now, I'm not trying to downplay that. 15.3% is still a large number. It's about 413,000 homes. So the question becomes, what's going to happen to them, right? And the answer is, we don't know exactly. 1.9% are talking about repayment plans. They're looking at potentially doing a short sale. I'm going to come back to that in one sec, or a potential deed in lieu. And you've got 13.4% that have no idea. There's no plan in place. There's no active negotiations going on in the bank, and things are kind of up in the air. Well, short sales, I'm going to tell you, I don't think are going to be a large part of it. Only 3% of all mortgages in the entire country right now are underwater. Unlike before, when it was 25, 28% of loans were underwater. So the one thing that the past 10 years has done is there have been significant gains in equity. So when you look at these people that don't have any loss mitigation plan, these 413,000 homes, what's likely to happen with them? And if you get someone that really can't afford that home, they're really in trouble, chances are they can sell it, pocket some money, move to a new place. And the numbers that we're talking here are not numbers that would hit the market all at once. They would be staggered. And demand is still such with supply so low, the market can absorb that many homes coming onto it without a significant crisis in front of us. Will it impact some areas more than others? Absolutely. So, but it's not going to cause the entire market to collapse like it did before. There's no indication of that whatsoever. As a matter of fact, Lawrence Yun, the chief economist with NAR, recently said this: given the huge price gains recently, I don't think many homes will have to go to foreclosure. I think some homes will just be sold. There'll be cash left over for the seller, even in a distressed situation. So that's a bit of a silver lining, and that we don't expect a massive sale of distressed properties in our immediate future. So there's a lot of things still to play out here, obviously, but there's also a lot of news that isn't necessarily being reported, and it's not all necessarily bad, right? So that happens quite a lot. The market right now, if, as I said at the beginning, if you're a buyer, it's a tough market, right? If you're a seller, you've got to work out that timing issue, but it is being done. I do think relief is going to be found this year with regards to more inventory coming up onto the market, but everyone's situation is different. So, if you've got a situation you'd like to talk through, or you've been, got an idea, you're not sure which way to go or what your options are, please feel free to reach out. I'm always happy to talk to you about that. There's never any cost or obligation. Let's just figure out the plan and put the plan together that's right for you and for your family. So until next month's market update, stay safe and stay well.